Hi traders, Nathan.bray here from ACY Securities. Let's have a chat and do some key level reviews here from our live interactive trading feed that we do provide free to all our registered clients here at ACY on Telegram. So let's start with the most recent. Let's look at Friday evening Sydney time. We were looking at a potential key level on the Aussie against US dollar, looking for shorting positions there. So ahead of course, a few moments ago, the Australian RBA, the Reserve Bank, decided not to raise rates, which wasn't a big surprise. It came in as forecast, okay, as expected. So looking at the rate of the Aussie against US dollar start to roar up, going counter trend, okay, we were looking at a key level up around this 65-cent level. So the reason being, folks, it's quite a simple strategy. We are going in line with this US dollar. So looking for shorting opportunities with the expectation that they weren't going to raise rates, or they'll leave them as is at 4.1% this afternoon. We were looking at this level. Why? Because the longer term trend is down on the Aussie against US dollar. We were looking at the fact that it had found this 65 level over the last few weeks being major point of resistance. So we're trading in line with the major trend. We're looking for a rally point back up to previous support acting as resistance. And folks, it certainly did that. From that level, we are down from Friday night, down well over 150 pips at this stage. So using the same logic, and the reason is I want to show you the last few broadcasts so you get an idea of how you can almost rinse and repeat your strategy, especially when you're trend trading. So let's go back a week or so. We were looking at the euro against the US dollar. Same scenario. The trend on this euro dollar, as we've been calling all year, has been down. Okay, so we're looking for opportunities for price to rally back up significantly. In this case, it's up around a 79 fib retracement level, previous level of weekly support becoming resistance. When those three stars align, folks, that can provide an opportunity to look for failure. And failure we've had. We're well over 200 pips in the positive, going short, in line with a very strong US dollar at the moment. So that euro against the US dollar is moving down. The question now becomes, where do you lock in some profit? Where do you exit this trade? Okay, the other one I want to look at is if we've got a strong US dollar, I was looking at some weakness on the US indices or the US stock market. Very similar scenario here, folks. So we literally had the stock market had been selling off, putting in lower tops and bottoms. We were looking at a weekly chart and we had a retracement, very similar to the euro against US dollar and the Aussie against US dollar. We had this retracement get back on the weekly chart from the all-time high at a 79 fib retracement level, coinciding with previous support on a weekly becoming resistance. Again, folks, same scenario. And from there, we have seen stock markets in the US, not just the S&P 500, sell off dramatically over the last few weeks. Now, folks, what I would say to you, if you want access to having multiple reasons or a confluence of reasons or stars aligning to highlight or broadcast out to you where key levels in the market might be, as well as a description, okay, feel free to just register your free account here at ACY Securities and email me. My email at nathan.bray@acy.com is in the description below. Good luck with your trading, everybody. And I guess I want to finish off by saying you can't be right all the time, okay? So I put up a major weekly resistance level at the top of this US dollar index range. Folks, I was wrong. This US dollar has blown through that level and closed above it. And our own analyst here, Luca, is telling me that this US dollar could continue to go potentially for the rest of this year fundamentally. That's all from me, folks. Have yourself a great trading week.